Good afternoon, everybody. Here we are on Monday, 3rd of June 2019 for session 41 of the Admiral Markets webinar series on mastering the 4 M's of trading. My name is Paul Wallace. I'm your guide for the series, and I'm a trader, analyst, and coach. As always, we look to begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group, investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. Presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. Admiral Markets has many good reasons for you to choose them as your main trading broker. As you can see there, one of the main reasons is that the very popular trading instruments of DAX 30 and Euro-Dollar offer very, very competitive spreads during the main trading hours. And Admiral Markets also offer the Metatrader in both MT4 and MT5 platforms with their own Admiral Markets Supreme Edition plugin. Admiral Markets is also a global brokerage which is regulated and authorized across many entities across the globe. If you speak to your account representative, they'll be happy to guide you to select the best entity for your own trading requirements. As always, ladies and gentlemen, my expectations for our session is to educate you about the 4 M's of trading so you can go away, analyze any market and be ready to trade it, and also help you raise your self-awareness about managing risk and managing yourself. For yourselves, ladies and gentlemen, I always have a broad range of experience of people joining us for the sessions. We always have a little bit of a time limitation of about 40 to 45 minutes and limited in the sort of limiters in breadth and depth of the topics. So I always try to focus on tools that you can utilize tomorrow in your own trading. And as always, we're just looking to talk about mastering the 4 M's of trading. I'm sure those of you who've joined us before will understand that those 4 M's are markets, method, money, and myself. And when a trader understands those 4 M's and is able to sort of manage and master them, that's when they tend to be in that sweet spot and allows them to trade to the best of their abilities. If you want a breakdown of those particular 4 M's, then you can find that in earlier sessions of this webinar series. You'll find all of those on the YouTube page for Admiral Markets and also for the Admiral Markets global page on Facebook, the links of which will be at the end of this particular series. So what we talked about last week is that we are as we're drawing the Mastering the 4 M's of Trading webinar series to a close over the next couple of weeks. What we've been talking about over the last week or two is about sort of drawing out the learning points from this particular series. So, what we've talked about specifically over the last few weeks was really about how to prepare yourself for your trading day, which is about managing myself. It's that 4th M. We always constantly, repeat how to follow those simple 10 steps. Once again, that is about managing myself because it gives you a process, which also gives you good trading routines. It helps you develop the right trading habits. So all of those, you might sort of look at that sort of those 10 steps and think, oh, that doesn't excite me, Paul. Well, it's not meant to excite you. What it is meant to help you become the best trader you possibly can be. That was my entire aim for the series, and having a simple 10 steps that you can follow day in, day out That's what actually creates the best sort of trading habits, and that's what I want to help you as a takeaway from this series. We've talked about, how we do our market analysis. That's number one, okay, the market. We talked about, how to choose our entry, and we're going to talk more about that today. Okay, I'm going to show you how to build a little plan that you can utilize some of the entry methods we've discussed. Most importantly, we've talked about how we can manage our risk, which is that third M, all about managing money. We've talked about, how to record and review our trades. Once again, that comes down to, managing myself, okay? That, by managing myself and being able to do that, that also helps with us, in terms of managing our trading performance, because when we record our trades and when we review our trades, well, all of that is helping us raise our self-awareness. And if you remember, we've talked about, 3 traits that keep coming out time and time again. Okay, good traders are process, discipline, and self-awareness. So, by following those 10 steps, okay, that gives you a little bit of process. By being able to follow it, that helps you actually generate, good discipline. And by recording and reviewing your trades, you're showing good discipline, but the reviewing of the trades is what helps you raise your self-awareness. Okay, so all of these elements that we've talked about have been going towards filling in and ensuring you're able to have a good process, good discipline, and good self-awareness, because those are the things that will actually help you become the best trader you can be. And that's, once again, that's what we here at Admiral Markets want to sort of educate you on and help guide you and develop it in yourselves. So, I appreciate just from some of the feedback and comments is that, we've covered an awful lot over this series, but, perhaps just having a look at like a little simple plan that you can take away. As I said, we're drawing to a close over the next couple of weeks, and, here's just another very simple trading plan that you can talk about, and actually sort of follow it. I appreciate that we have some people joining us who are very new to trading and just trying to, get grasp and understanding. So just by having a simple trading plan that we're able to sort of guide and follow, that gives us the opportunity to have for new traders to start correctly. And what we'll do is you will sort of kind of roll that into looking at the charts and show you the anatomy of a few recent US dollar trades, based upon what we've covered over the last few webinars of the series, but also what we'll cover today as well. So hopefully you can show that you can see how we're taking what we've learned and covered in the series and how we sort of push that into everyday occurrence in terms of the way we actually look to trade. So I suppose to begin with, it would actually help for people to get a real understanding of the US dollar, especially if you're an FX trader, or you prefer to focus on the FX market. Well, then absolutely you need to have a good understanding of the US dollar. See, the thing is, the US dollar is considered the reserve currency of the world, and so as a trader, this is the most important currency to watch in the Forex market. But it's not also just for the Forex market, okay? And we talked about this a few weeks ago when we were looking at setting up profiles for commodities. As you know, as the reserve currency of the world, what we also see is that most of the major commodities in this world are priced in dollars. So oil, gold, silver, corn, wheat, etc. All of the commodities of the world are priced in US dollars. So understanding what's going on in the US dollar is key for you as a forex trader, because it's the biggest major FX pair, or FX currency, but also in terms of if you're a commodities trader, being able to understand the implication there, and also even just towards cryptocurrencies. Okay, that primarily most people will trade cryptocurrencies against the US dollar. I know you can trade cryptocurrencies against other cryptocurrencies or other fiat currencies, but normally most people are trading their cryptocurrencies against the US dollar. So it just becomes hugely important for you as a trader to understand what's going on with the US dollar, right? But primarily forex markets stay tried primarily off the US dollar, and for those of you who are completely new to trading, right, the largest economy FX pairs versus the US dollars are referred to as the majors, and you'll hear me talk about them. If you ever joined us in the past for some of the real-time daily trading ideas sessions, which are still available on the YouTube channel and Facebook page. You know, you'll hear us always talking about, you know, certainly myself, about the majors, understanding the majors. You know, for those of you who are completely new to trading, the majors are the following. So we've got pound against dollar, the euro against the dollar, Aussie against the dollar, Kiwi against the dollar yen, the dollar CAD, and the dollar Swiss franc. And not surprisingly, they're all made up of, you know, big major currencies trading against the US dollar. But also further than that, we have what we know as the dollar index. Okay, sometimes you'll hear it referred to as the DXY. Okay, DXY. And what the dollar index is, it's a basket of currencies. All right, comprised of primarily the euro. The euro makes up nearly 2/3 of it. Japanese yen, sterling CAD, Swedish krona, and also the Swiss franc. And this becomes actually very, very useful to us as traders, right? Traders look to the dollar index. You'll very often find it, you know, it might be coded as DX or DXY, as I said, for clues about possible future trends in the value of the US dollar. And as I said, it's actually really quite key for us to understand that. Okay, we just want to know, you know, the dollar is the you know, it's the daddy of the currencies. It's the big silverback gorilla. Okay, so you know, we want to know, is that gorilla asleep, or is it awake? And if it is awake, is it angry? All right, or is it angry, or is it calm? Because you know, so much of the rest of the sort of FX trading world and commodities trading comes off the back of it. So you know, having a good handle on the US dollar is key for you as a trader, and that's what we're going to focus on today. All right, we'll just focus on US dollar and how we could make it a little plan, and I'll share with you a few of my own trades recently, and we'll see how they show how they have played out from merely trading the US dollar. Okay, so as I said, we've covered lots of different currencies. Okay, we've covered lots of different equities and indexes and commodities and cryptos. But the truth of the matter is, you could very easily just focus on trading the majors. Okay, the major currencies against the US dollar, and now there is opportunity abound there, and I'm going to show you and talk about that for the rest of our session today. So this is the monthly chart. Okay, so if you look up there on the top left, okay, you'll see that it is it's normally coded as US dollar X, USDX. Okay, here on the our charts. Okay, on the Admiral Markets charts, and that will be, you'll see that based upon it's normally on a quarterly chart. So this is a monthly chart here, okay, and every candle is green bullish, red bearish candles, just the standard setup we've talked about since the start of the Mastering the 4Ms, so series with blue 20 period simple moving averages, red 50 period moving average, and a green 200. There's fractals on there, and just drawing in particular levels of support and resistance. And hopefully you can just quickly see on that. So since sort of January 2018. Let's just use the pen here. Let's use our drawing tool here, shall we? From having had kind of a real interesting drop there, okay, in US dollar from sort of start of 2017, the whole year that down to the start of 2018. What you can see from then is actually we've been in an uptrend in the US dollar. Okay, remember this is the US dollar, okay, against a basket of currency. So what we're seeing is, when price is grinding its way north, like we see there, okay, it's grinding its way up. Well, that is an indication that the dollar is strong against the major currencies. Okay, so hopefully you can understand how that can be very, very useful information for us as a trader. So it's we had a year in 2017 of a real strong collapse there, okay, in the price of the dollar. But then for the almost last 18 months, okay, 15 to 18 months, what we've seen is, we've seen dollar strength. The dollar's just been grinding up, okay. We're in a little bit of an interesting point at the moment, but it is still just grinding its way up on the sort of longer term frame. All right, so I'll show you on the shorter term frame later on when we switch to the charts. But the important thing to recognize is that on the big picture, the dollar has been getting stronger, okay? It's been just grinding its way stronger, okay, over the last 15 to 18 months, and that is useful information for us. So, for those of us joining us who are, very new traders, who I understand that, we have all manner of, people across the whole experience, their trading experience across the board. So, when the US dollar is trending up, what does that actually look like? How, for new traders, how does that actually play itself out? So what does a bull market in the US dollar look like? Well, remember, this means that the US dollar is gaining in value, it's getting stronger. So what we expect to see is we expect to see the euro dollar, the pound dollar, and the Aussie dollar going down. And then along with the dollar Swiss, the dollar yen, and the dollar CAD rising. That's what we're expecting to see. That is an indication that, you know, there is a bull market in the US dollar. So, you know, what do traders do when they expect the US dollar to trend up? Well, actually, what they're looking at is they're gonna practically sell the euro dollar, the pound dollar, and the Aussie dollar, and or, you know, they'll be looking to buy the dollar Swiss, the dollar yen, the dollar CAD. That's what they're looking to do when the US dollar is strong and the US dollar overall is trending up. Okay, because by doing that, that is what's giving them the opportunity to sort of take part in a rise in the US dollar. So you know, when we see the dollar trending up, well, you know, you might see, yeah, there's, you know, dollar yen, okay, 15-minute, the pound yen, okay, the dollar index chart itself, okay, you know, just basically would be sort of drifting their way north, okay, where especially when we see dollar is the primary currency, the base currency, or, you know, when you know, like when pounded dollar, for example, is the dollar is the secondary currency, well, then we'd actually expect to see that chart trending down. But that is still giving us an indication that the base currency is weakening and the secondary currency, which in this case the US dollar, is strengthening. So, you know, if that's what we expect when we see the US dollar trending up, what do we expect on the flip side when the US dollar is trending down? What does a bear market in the US dollar look like? Well, you know, remember that actually means that the US dollar is falling in value, right? So what we'd expect to see is the euro dollar, the pound dollar, and the Aussie dollar rising, and at the same time we'd expect to see the dollar Swiss, the dollar yen, and the dollar CAD actually falling. That's what we'll be looking to see. And what do traders do when they expect the US dollar to trend down? Well, they'll be buying euro dollar, pound dollar, and Aussie dollar, and they'll be selling, you know, dollar Swiss, dollar yen, dollar CAD. That is what we'd expect to see when we see that the dollar is weakening and trending down. So, you know, when we see that, okay, you know, here's a couple of different charts. This top left one is the dollar yen on a daily chart, okay, you know, and that's giving us an indication that's dropping down. That's showing us that in that particular case, the dollar is weakening and the Japanese yen is strengthening. And then the top right chart here is the dollar against the Swiss franc on the hourly chart. And what we're seeing there is, you know, that's an indication the dollar is weakening and the Swiss franc is strengthening. And then the bottom one, I think, is euro dollar on the 15-minute chart. You know, and what you can see there is, you know, that's showing us that, you know, the euro is strengthening and the US dollar is weakening as it works its way north. So that's what we expect to see when we see US dollar is trending down. So just as an aside, part of it, it's important for us to understand that kind of 24-hour FX clock, because that, you know, builds into our plan. I appreciate that we have people joining us from all over the globe, all right, in terms of traders. You know, we have a truly global audience, you know, with Admiral Markets being a global brokerage. But it is useful to understand to remember that the FX transactions are executed by people, you know, or algos based all around the globe. So it's important to know the kind of sort of the time chart, so you can fully understand the opening times, not only for each currency, but for their particular markets. And hopefully, just using a trader, you can probably see where there are periods when the times kind of overlap a bit, and invariably that's where, you know, an awful lot of trading occurs, and that's that's when people are the most awake and ready to trade. Excuse me, and that will constitute the most volume for that particular instrument. All right, and volume is important, particularly for let's say for large institutional traders. You know, a kind of volume and liquidity is what helps them trade to the very best, allows them to let's say conduct and execute their trading plans in the best, most efficient way possible. But, you know, what we really want to understand is, you know, just having active and dead zones. All right. So, you know, in terms of active zones, well, you know, we're looking there really from the London or the European session from about 7 in the morning to sort of 10 o'clock in the morning. That would be sort of GMT. We're in we're in British summertime now, but it'd still be sort of 7 a.m. to sort of 10 a.m. And the best currency to trade in in that kind of European session is, because London is still the head of FX markets. You can actually get away with trading all of them, but not unsurprisingly, there's a lot of volume in pound and euro. So it wouldn't surprise you then to find that to see that both pound against the dollar and euro against the dollar are traded, are very popular trading instruments in that period. In the afternoon, okay, for the US session, from about half one to sort of half six, half six in the US. The US session will, not unsurprisingly, the best currencies to trade are the US dollar denominated ones, okay, which gives us an awful lot of opportunity. And in the Asia session, all right, where we'd be looking, some people would go from like sort of 12 a.m. to 3 a.m. So, some people would be saying it's a little bit longer, maybe from around about sort of 10, 11 o'clock to sort of 6 o'clock London time. Well, then, you'd be looking best currencies to trade, Japanese yen, Oz, Kiwi, and Canadian dollar. It's not a surprise, but actually, being able to trade them against the US dollar, right, as part of the majors. And really, what we're looking at is, the times outside of there, they're a bit, what we'd call like a dead zone, all right. So all those times outside of the active zones, the dead zones, and while it is possible to trade there, we're going to get the most volume in those particular sessions. And especially if you're let's say an intraday trader, well, then invariably you'd like to sort of be able to trade where you see the most volume. So we can have just a very simple US dollar trading plan based on what we've just talked about there, based upon the kind of 10 steps we've been covering for the last few months. So we can use our US dollar profile to analyze the US dollar major pairs. If you remember, a few weeks ago we did about how to set up profiles within MT4, and we set up one in US dollar, and by actually having just a profile for the US dollar major pairs, very, very quickly we can do our analysis to work out, is the US dollar, is it in a bullish trend? Is it in a bearish trend? Is it actually going sideways, consolidating, or is it just in a sort of plain choppy environment because it's at the end of a particular trend? If it is trending, all right, then, well, which are the best pairs to trade? So, it might be very clear. It might actually only be one or two of those pairs, major pairs, that are trending, which case it's very easiest. But, if they're all sort of trending against the US dollar because the US dollar is on a bit of a tear, whether that be in a bullish or a bearish manner, well, you can quickly have a look. By looking at your profile, you're looking to identify, which are the kind of cleanest or strongest trends for you to join. It becomes quite clear quite quickly. You've heard me say it time and time and time again, is that good trends will leap off the charts at you. You don't need to force it or push it. If you do, well, then it probably isn't a very good trend anyway. As always, if you remember from our 10 steps, you're going to wait to see when you get a confluence of events occurring. And what does that mean? Well, that's when we're seeing price action signals at particular levels of support and resistance. When we get 2 to 4 things happening in one time and place, that is our opportunity to take a good trade, and that's what we're looking to achieve. As always, we are primarily looking to enter trades in line with the trend. That's ideally what we like to do, but we talked about key day reversals, and we'll see that when they occur across those major FX pairs, that can be the sign of the sort of good end of the trend. It might not necessarily be a complete reversal, but it might just be, as we'll see here as in the next few charts, is that it's a sort of a breather from the dominant trend, and that in itself might provide us with trading opportunities. As always, we want to ensure that our trades are position sized and risk managed accordingly. If you're not fully understanding that, well, then we covered that back in one of the earlier sessions of the Mastering the 4 M's of Trading webinar. So be sure to actually sort of go back and pick that up from the YouTube channel and the Facebook page, and make sure that you can understand how to position size and risk manage your trades accordingly. As always, as I said right at the start of this session, make sure to record all the trade details. Once again, we covered that in one of our particular sessions. Make sure you keep all of those trade details, all right? It's not that difficult to do these days. And invariably, once you've done that, well, make sure you review that trade, excuse me, post completion. Excuse me. do apologize. Because actually, reviewing that trade, that is actually how you learn, regardless of the outcome of the trade. It's about learning, where that trade has, how that trade has played out, what has actually come of it. And by doing that, remember, every time we review that, we're learning more, and all of that is doing is helping us, okay? Helping us in terms of raising our self-awareness. Remember what I said about that right at the start of the session. And once you've got good data, all right, and what that can be maybe 25, 50, 100 trades, all right. You have the data to understand, which is the best way for you to trade. Maybe you're better at being, a buyer of the US dollar. Maybe you're better at being a seller of the US dollar, all right. Maybe you're better at trading inside bars, or maybe you're better at trading sort of, pin bars or engulfing candles. Once you get enough data, the more data you get, well, you're in a position to sort of, tweak your plan based upon the data. And I do mean by that, looking at sort of having like 25 to 50 to 100 trades under your belt. Don't just be interested in tweaking the data after let's say 1 or 2 trades. It actually takes much more data than that to give you some feedback that is worthy of changing your plan towards. Okay. So, we can have just a very simple US dollar trading plan like that, which just, allows us to focus just on trading the US dollar majors. And that can be a very, very simple and good place to start for a trader, just to understand that and work with that. And, that is something that can be traded on the weekly and the daily charts, and allows you to sort of trade around your day job. You don't actually need to do as bigger amount as you might expect. It's just a case of you being able to sort of allocate a little bit of time every day to analyze those markets, put your trades on, and manage your positions. So, remember we talked about it a few weeks ago about preparing for your trading day. It was all about why do we do it? Why do we have these trading plans? Because, and you've heard me go on it again and again and again, it's all part of a process which drives us to be disciplined. So it forces you to be still, okay, to be in the moment. By reviewing your trades, it forces you to reflect upon yourselves and your trading, and all of that helps you build self-awareness. All right, process, discipline, and self-awareness, they keep coming up time and time and time again. The good traders, okay, have those traits in abundance. And that's not, those are not natural traits. Those are traits that we can all learn and we can all develop and utilize to be the best traders we possibly can. So, we talked about, you can always have a look at all those kind of major pairs, but today I'm just going to focus on US dollar. All right, that's all we're going to do. We're going to switch to the charts in a moment, and we'll just show you, how we take what we've learned there and put that into just a simple trading plan. And there's plenty there. You can see that Admiral Markets provides a wide range of instruments for you to trade, okay, whether it be indices, commodities, equities, or crypto, okay. And interestingly, the majority of the well, in fact, all the American indexes, all the commodities, all the cryptos, okay, and all the US stocks will all be priced in dollars. So once again, understanding that US dollar is just a hugely key element to you being able to sort of trade well. So remember, if you haven't seen it, as always, okay, mastering those 4 M's of trading. Whenever you're looking at a chart, we're supposed to do it. Step one, define levels for support resistance. Step 2, define if there's a trend. Step 3, see how price reacts at key support and resistance levels. Step 4, look for price action signals at those confluence levels. Step 5, is it part of a bigger chart pattern, which I'll show you an example from my own trades over the last week or 2. Remember, step 6, always define your risk, okay? Accept it, stick to it. Step 7, rewards, okay, are using targets or trailing. Remember, know your exits. Step 8, okay, keep scrupulous records. It's key that you do that. So that step 9, you can review, you improve your performance by debriefing your trades, and step 10, you repeat it. Consistency and discipline are key. And most of those sort of 10 steps that we've just talked about, in even just having our own simple little US dollar trading plan. Okay, that's actually can be easily done, easily happened. Okay, and it's just a great little starting point for you as a trader. So as always, when we're talking about mastering the 4Ms of trading, all right, you remember you're always looking to manage those 4Ms of trading: markets, method, money, and myself. Just always check in with yourself, all right, okay? About how well you're doing managing those 4Ms of trading. If they are in alignment and you're mastering them, well, then that is when you're trading well. If you're struggling, it's normally invariably because one or two of those areas is out of whack, so to speak. So when that happens, well, invariably that's when we tend to struggle with our trading. So as always, if you have questions about this, you're very welcome to contact us here at Admiral Markets. You can give us a call on the London number 02035 140 756. Drop us an email at hello@admiralmarkets.com. You can watch this, okay, and all of the rest of the Mastering the 4Ms of Trading webinar series on youtube.com/Admiral Markets or on facebook.com/Admiral Markets Global. You'll be able to say, follow all these sessions, and hopefully that will help develop your own good trading habits, which is what we here at Admiral Markets, which is what we're actually looking for. So if you'll just bear with me a moment, what we're going to do is just going to switch across to the chart, and we'll just talk about a little bit about what we've discussed today, okay, and how we can utilize just a very simple dollar trading plan to help us with our own trading. So if you just bear with me a moment, we'll switch across to the charts now. So hopefully you can still all hear my voice. Hopefully you can still all see my screen. What we've got up here is the Admiral Markets Metatrader, Metatrader 4, and with the Supreme Edition. But really what we're looking at is what we talked about is the talk about having a profile. We talked about setting up a profile. If you're new to Metatrader 4 or 5, then as I said, go back and have a look at the session we did on setting up profiles for we did profile setting for cryptos, for indices, for equities, commodities, and also for FX. You can see down here I've got one for a US dollar, and that's what we have there. And what I have here is just very simple, okay? Aussie against the US dollar, pound against the US dollar, euro against the US dollar, dollar against the Canadian dollar here. And bottom left, I've got is dollar against the yen, dollar against the Swiss franc, and new Kiwi against the US dollar. And then the far right, we've got bottom far right, we've got the sort of dollar index itself. I've also got one or two of the sort of the extra dollar currencies in terms of the emerging markets, and also gold as well, just to sort of give us an idea of how the sort of intermarket relationships between particular instruments. So what we'll look at is, as always, we're going to look at the start with the dollar index. So let's just look at the dollar index chart on here. And as always, remember, what we looked about is, our simple plans, okay? Whenever we're looking at a chart, okay, start monthly, weekly, daily. Just make sure we've drawn on our significant levels of support and resistance. Hopefully here you can see that, we have done. Okay, we've just drawn them on from our monthly charts, and we can see that price has been grinding up there. What we also had is what was interesting to me here, I remember trading it vividly, is here at the sort of start of January 2017. This actually closed as a monthly key reversal. It pushed to new highs, but closed just beneath the lows of the previous candle, which gave us an indication that uptrend for sort of the best part of 2016. On before we had a real strong run down there, and as I said, we've just been working our way here, okay, just grinding it. I'm intrigued that we've getting quite a lot of wicks here, okay, and the candles are getting smaller and smaller if you look at that, but we're still grinding north. So on the big picture, we're still grinding north. There's still a lot of dollar strength, but as we go down the chart, we'll see a bit more of that and what it's offering us. We go down to the weekly chart. Okay, so we can see what we had was after a move down here. As I said, those of you who used to sort of join us for the real-time daily trading ideas, we talked about this, okay, at the time. Price was actually just coiling up, all right, it's just coiling up to a wedge, and you can see that, excuse me, you can see that actually price exploded and drove its way north here. But even as it goes up, it pulls back, goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up. And what we're looking at here over the last couple of weeks is, it's whilst it's pushed to new highs for the year, I'm just going to draw in that level there because it's it's a new high for the year that we saw a couple of weeks back. We can see over the last couple of weeks it's fallen back a little bit once again. If we go to the daily chart, zoom out, okay. We can see that the daily chart has been moving north, and probably have drawn these from previous sessions that actually the lows are still getting higher. That's giving us an indication that we have been in an uptrend. Prices above the moving averages. There is each of the lows is higher. But kind of what started to get me interested here is for anatomy of the trade is that price was pushing to new highs. Here on the sort of 23rd of May, and I want you to just remember that date, 23rd of May, price pushed to, the dollar index pushed to new highs for the year, probably new highs for, what was I think about nearly 2 years actually, if I just look to the weekly chart and zoom out very quickly. We can see that, price, the last time price had traded around here was back sort of May 2017. So, realistically 2 years since price had, had traded there. And what we saw was price pushed to those new highs, okay, on the day. But then actually it fell over, it rolled over, fell away, and actually it closed beneath the low of the previous day's candle. That is a key day reversal. Again, there's a key day reversal there, and that's what was kind of interested. Okay, we've been in an uptrend and we'd had a key reversal. And it was the second one we'd had one here. Okay, which had kind of drifted down a little bit, but hadn't really played up. But actually, they got the second one there, and then what's actually happened is price pushed up there last for another couple of days, and then before rolling over again. And here we have is acting like almost like a double top here. Okay, double top here on the dollar index. That's kind of intriguing for me, and that has provided a couple of opportunities over the last couple of weeks. So as I said, remember that whilst we've been uptrend, we've had a key day reversal there on the 23rd of May, and that is that's actually kind of very interesting and very curious to us. Okay, and that's gonna play a part over the next couple of slides. So, with that in mind, then, interestingly as always, and I'm just going to switch to my other profile just because of my charts, and they're a little bit more up to date than this dollar one. But what we had is, we've had, look at there, that dollar index. We've had a bearish key reversal. Okay, and if you remember from what we covered just a bit earlier, all right, was about how we talked about how the dollar index is made up of 57% of the euro. So it's almost like an inverse correlation there, okay, on the dollar index and the US dollar the euro dollar chart. So if I go down to the monthly chart here, okay, this is the euro dollar. So in the same way that we saw the US dollar collapse and then rise, what we saw in the same period with the euro dollar was that the euro dollar rose and then collapsed. Okay, remember it's like inversely correlated. You can see it. You can see it happening. You can see that happening. And what we've been doing is sort of just grinding our way down. Okay, just kind of grinding our way down here. Just a little descending wedge there. Just grinding our way down there, back towards around about the 111 area, right? So it's just been working its way down there. On the weekly chart, okay, you can see that itself. It's just grinding its way down there. Absolutely grinding its way down there. And the 111 area for the moment has been acting as significant support. Go down to the daily chart. Well, what we've been looking at is for parts of this year is about prices making new lows. Remember we talked about the dollar index making dollar index making new highs. The euro dollar has been making new lows. But even as we've pulled back, we had a trading opportunity here a couple of weeks ago at the start of May. This is a 3-bar reversal. We're in a downtrend. Price rose up to the 50-period moving average, and we had a 3-bar reversal. Okay, remember, when downtrend, so we have 2 green bars followed by a red bar at a significant level of support and resistance. That's what we had there. We had a nice little trade running back down towards the recent lows. Okay, and we touched on that in the real-time daily trading ideas session. You can find them on there. But what we actually had here, ladies and gentlemen, remember I talked about 23rd of May. Well, here we had on the 23rd of May, we kind of pushed down to a new low for the euro dollar for the year, but actually price got bought up, it got bid up, and what happened is price rose all the rest of the day and actually closed just by a whisker above the high of the previous day's candle, which which is, it's a key day reversal, all right? It's a key day reversal, and those of you joined on the excuse me, real-time daily trading days, we were looking at buying this. Okay, we had orders in here to buy the sort of the 50% pullback of it, so around about 111.50, all right, with our stops beneath the low, okay, about 111.02, and actually looking to target back up towards around about the 113 area, okay, and that's, we had a bit of a fall away, okay, but actually, this then becomes a double bottom. In fact, you might say this is a bit of a triple bottom here, and that actually this candle pattern is a morning star formation as well. You can definitely Google and find that out there yourself. So I'm kind of curious. We've risen up there from around about that kind of 111.50. We're up around about 112, just above 112, and here we are at the 50 period moving average. And hopefully you can see there that actually what's happened is, every time we've got up there, it's kind of rolled over. So I'm going to be keeping an eye on that particular trade as it plays out over the next couple of hours. And, ideally, what I'd like to see it do is, to get above and hold, and then maybe we'll see it sort of drift its way back up to 113. But, there we go. What we're seeing there is, if you remember, if the dollar index is going down, that means that the dollar is weakening. If the euro dollar is rising, that means the euro is strengthening against the dollar. So, we're looking at, well, is there anything else that helps confirm that for me? Well, if I just look at, another, we're looking at, remember the dollar pairs or dollar trading plan. If we look at the dollar against the Swiss franc, on the monthly chart, okay, what we see is, the not really, there's a trade idea, but we can clearly see that every time prices got up to this around a kind of 101 to sort of 103, price has been pushed down, and that's where it's got up to again and fallen away. Looking at the weekly chart, price rose up into that area, and then it kind of tried to push into a new high, but then actually it rolled over and fell away and closed beneath its lows. And actually what we've seen is, over the last 5-6 weeks, price has actually drifted down, which is another indication that Swiss franc is strengthening and the dollar has been weakening. And that's what we've been seeing after this nice long uptrend. And that's that's something for us to keep an eye on. It's just informing us that invariably just another example of the dollar the dollar weakening after the kind of long trend upwards. So you can look through the rest of the charts, okay, in terms of the pound against the dollar, okay. Well, this has been very much a sentiment driven play, okay, based around Brexit, and we can actually see that for most of the actual year the price is actually just putting in there, looks like a head and shoulders pattern. It's been working there before it rolls over and falls away back down to around about the 125.50, 126 area. That's what it's drifted down to. And if I look down here on the daily chart, there wasn't really, May was a great selling period there. There wasn't really kind of opportunities for me in terms of how I like to trade. But, we can see that is, a very clear downtrend on the daily chart, isn't it? We've hit that 126, and, look at that. That is not it's not a key reversal, but it's interesting to see that that kind of bar prints there, and I'll be interested to see how it plays out over the next day or two. So if I look at what does become interesting is dollar yen. If I just look here, so what we've seen is dollar yen has been a bit of a. If I look at that, it's been a bit of a messy picture there. But price kind of rallied up and it hit the 200, the weekly 200 period moving average, and once again price pushes up to new highs, rolls over and falls away and closes beneath the lows of the previous week's candles. That's a reversal candle. It's giving us an indication that we're likely to get an indication of continued price moving down. That means yen strength and dollar weakness, and that's what we've seen for the last 5-6 weeks, and just you've seen it just drop away. If I go down to the daily chart, which is kind of curious, we can see that once price had actually moved beneath the 50 and the 200 and the 20, price was just moving its way down there quite nicely, and then price actually pulled back here. It pulled back quite nicely until it hits the 20 period moving average, and then the next day, okay, the next day, which was 22nd of May. Remember, we were looking at 23rd of May for the other bond. 22nd of May. Price actually has rallied back up, and then what do we have here? This is an inside bar. We've got a confluence of events. We've got an inside bar, which also looks a little bit like a spinning top there, okay, which is at the 20 period moving average on the pullback, okay, from a downtrend, and that gave us the opportunity to short the dollar yen there, okay, about 110.20, all right, with stops at about 110.65. Okay, so we had about 45 pips of trade risk, and as you can see, price kind of has fallen down all the way considerably. Okay, on Friday as part of that. Just as another side, remember step 5 is always a case of, is it part of a bigger chart pattern? Well, actually, some of you may have already recognized that, when price did that, it was also sort of just showing us a bearish flag pattern. All right, remember we talked about that. Step 5 is about being part of bigger flag patterns. Is it a case of is that a case of that can help us, all right, in terms of our trade idea, which it certainly does do here. It just gives us some more confluence of events. Okay, we know that the dollar is weakening. Okay, we know that the yen is strengthening from other work we're doing. We know we've been in a downtrend. Price is having a pullback. It's hitting the 20-period moving average. It's printing an inside bar with a spinning top. It's also being part of a flag pattern. It's just, as I said, that confluence of events all coming together to give us the best opportunity to take that trade. And if I look at the other dollar pairs here, so here's the dollar against the Canadian dollar. Okay, on the weekly chart, it's been the price has been an uptrend, but it has been rather scruffy. It has been a bit of a scruffy work away. Quite a few wicks, but it is just working its way up there. On the daily chart, this has kind of been a bit scrappy for us, because what actually happened is here, I had a bit of a failed trade earlier in May when price was working its way up. And then price actually printed a 1, 2, 3 reversal. Okay, we've got 2 reds followed by a green, and we were looking at the pullback on there. And price triggers in, but actually it took me out there. Okay, and I lost 1 hour on that particular trade. But then the next moment here we have is actually it was just setting up. Sometimes that's what can happen. Price pushed to new lows, but reversed and closed above the highs of the previous candle. This is another 1, 2, 3 reversal, 2 reds followed by a green, 2 sellers followed by a buyer's bar, which is also the candle. But unfortunately, I was waiting. This is me just waiting to sort of see if it would come back towards that 50 to trigger in, and it hasn't. It actually just tuck off there. Okay, the spring had sprung, so to speak, and actually we can see price had just raced all its way north there. Okay, so from being around about 134.40, we've gone up to 135.64. Okay, so it's risen 125 points, and unfortunately, I've missed out on that because my entry wasn't my sort of deeper entry wasn't triggered. So even the best of us, all right, even the best of us have either missed trades or trades that fail. Okay, it's okay. Remember, if you're completely position sizing and managing risk, that's absolutely fine, ladies and gentlemen. All right, that's just part of trade. And if just finish off with the last couple of the dollar pairs. Okay, so we've seen that here we have in a very nice trend, but there wasn't really for me on this move down, wasn't really opportunities for me to get on board of that. But what we did see here, on the Aussie dollar, and what date was this? The 23rd of May again, is that price puts in, it puts in a bullish key reversal candle here, okay? A bullish key reversal candle. Price pushes to lows, okay, but actually closes above the high of the previous candle. It's also a double bottom, remember, so it's part of a bigger chart pattern that makes it, it's a good reversal pattern, and invariably, what we had was, orders in here, okay, to sort of buy at around about 68.85, okay, 68.85 with our stops beneath about 68.60, and what we can see is actually this afternoon we've just hit our target, kind of the 261 extension of that, as price actually just moved its way up there, right? And it's as I said, we've had a key reversal after a nice downtrend, and it also gives us an indication of the sort of as part of a bigger pattern in terms of the W pattern there. So that worked out well. So even though the dollar CAD has actually we didn't have much joy with that, we had a losing trade. Well, in terms of what is being shown to us in terms of the dollar index, okay, the euro dollar, the Aussie dollar, and the dollar yen, okay, that's actually more happily made up for it. And the same is true with the Kiwi dollar, okay. Kiwi dollar here on the weekly charts, okay, we sort of just drove our way down here. We've been in a long downtrend. There's been a couple of nice trades as price moved its way down, okay. But once again, here we had on the 23rd of May. All right, we had, after a nice downtrend, we had a key day reversal. We had a bullish engulfing candle. Okay, price pushes to new lows, reverses and pulls up and closes above the high of the previous candle. And this actually took a few days for us for it to trigger, but we can see that actually price rallied up there, but it didn't come back down to my entry order around about 65.05 until about 4 or 5 days later. And what we're seeing at the moment is that also has now formed a nice higher low, and actually price is just generating, grifting its way north there. So there you go, ladies and gentlemen. Hopefully that's just a quick bit of example there today on how we can just build a simple plan, just trading the dollar index, just making sure you know what the dollar index is doing, and then just trading the major dollar pairs, looking to see when we've got nice trends, is there a chance to sort of join it, and on occasion, just rarely on occasion, after a nice trend, if there is a key day reversal, that gives us an opportunity to sort of take the sort of breather reversal trade on that. I hope you found that useful. As always, wish you the best of success in your own trading. As I said, we're drawing to a close here over the next a week or two, okay, and mastering the 4 M's of trading. But this session, like all of the others, was recorded and will be put into the webinar archive. And I hope you find value, and I hope it helps you in your own trading endeavors going forward. Many thanks, ladies and gentlemen.